Hey guys, if you would ask me the question, hey dividend shots, which question do you get asked the most on your Instagram account? Then the answer would be quite simple. Most people ask me, hey, how can I start investing? And today I want to explain to you how you can start investing. A little while ago I wrote a little guide which I have yet to finish on dividend investing and how you can start doing it. And in this video I will guide you through the 5 steps which you will have to take before becoming a stock investor. You basically start by opening a brokerage account. You then have to select your stocks. You have to do some research, find the companies you want to be a partial owner of. Then you have to decide how many shares you want to buy, choose your order type, which I will explain later in this video, and then you are a stock investor. Let's look at the first step, opening a brokerage account. Well, today we have the internet, so it's pretty easy to find a stockbroker. Opening an online brokerage account is fairly easy and it more or less takes the same steps as opening a bank account. First you will have to fill in an application form, then you will have to provide proof of identification, and then you will have to wait till your account is verified. Then after waiting and after having your account verified, you can actually fund your account. You can do this in multiple ways. Different brokerages offer different options. You can of course transfer your funds electronically, for example through PayPal or through bank transfer, or use a credit card. But the problem that most people encounter is to find the right broker. Now, if you live in the United States, you probably don't have this problem, but I have a lot of followers which don't live in the United States, and for them it is always easy to find a dependable broker. And I will come to that later. First, I want to list the best brokers I think that are available in the United States. Luckily, a lot of these offer zero transaction costs. There's been a war on transaction costs in late 2019, and because of that, a lot of brokers are now offering zero transaction costs, which is of course a big positive. The best brokers in the United States. Well, I think TD Ameritrade is the best for overall and for beginners, with the reasons listed over there. Zero commission trading, of course, and they have a large selection of educational materials, the largest in the industry. This is a big positive because if you start investing, you can of course first watch the videos and then afterwards make your decision to buy a certain stock. Then we have Fidelity. If you're more experienced, you can of course start researching companies, and Fidelity offers the best research experience. Then we have Charles Schwab, the best for IRA accounts, leader in retirement services. So if you're thinking about your retirement, you might want to think about Charles Schwab. And then we have Interactive Brokers, and what I like about Interactive Brokers is this: they have global access. It offers trading in 26 countries and over 125 market centers. This is what we want because a lot of my followers have the problem that they don't are not able to find the right broker for them, and Interactive Brokers can help them because they offer global access. So how to find a dependable broker outside of the US? Well, personally I'm from the Netherlands. I use Dividend, which is mainly used by Dutch people because it's regulated by Dutch authority and law. And I like Dividend because I'm able to call the contact service in my own language. Well, I have a link to a website, stockbrokers.com, in which I can search for a broker that is available in my country. So what you might want to do is go to this website, stockbrokers.com/guides/international trading, and then you can search for the brokers that support your country. So you can simply type in your country name, and then a broker will show up which is available in your country. Two things to consider. You need to consider the cost of commissions, which is very important because commissions can eat up your investment returns, and of course you want support. So also consider the educational material that offers the guidance, the option to ask questions online or being able to call them. Always important, because of course it's your well-earned money that you're putting at risk. Step 2 is selecting the stocks that you want to buy. So basically you will have to think about the companies that you want to consider adding to your portfolio. Well, you should start by researching companies that you are already familiar with. So, for example, I own stocks of UPS. I like it whenever I see a UPS delivery truck driving by, because I know that they are working for me essentially, since I'm a partial owner of their business. You have to look at a list of things before buying a certain stock. I've listed some of the things that are important. You can go to the company website and look at the company's annual report. You can read the management letter they send to shareholders, which might be included in this annual report. You might want to use the analytical tools available on your broker's website. You can read the conference call transcripts, which is basically a call that is held after the quarterly earnings update. And you want to read the recent news. Well, this sounds like a whole lot of work, but actually it is not that much work if you know where to find all this information. And one of the things that I frequently use is a mobile phone application which is called Seeking Alpha. It's a website which is also available for free on your computer, and it's very simple. You simply add a stock to your portfolio and you get updates on the news, on the quarterly earnings. You can use some of their analytical tools. You can read conference call transcripts, etc. So actually all the information that you want is listed after you add the stock to your portfolio on this app. The third step is deciding how much money you want to invest. This is of course very personal. First thing I want to do is I want to stress that buying one share of $300 is essentially the same as buying 100 shares of $3. I mistakenly see a lot of people search for penny stocks, thinking that penny stocks can make them quick money. But actually, research has shown that this is not true. You can actually buy one share of $300, which is essentially the same as buying 100 shares of $3. So don't make this mistake. You should focus not on the amount of shares, but focus on how much money you want to invest. Well, this of course depends on how much money you have. This depends on your salary. This depends on your expenses. But when first starting out, I would say just buy one share just to try things out, see how it works, get a feel. Perhaps you can also wait till you will receive your first dividends to see how that works at the broker. And afterwards, this is what I personally do, I would devote a fixed percentage of my salary into dividend paying stocks. So for example, if I receive $2,000 in salary, $2,000, I would say that I want to invest 20% of my salary into stocks. So if I take 2,000 and I take 20% of it, that's actually $400 a month. The other 80% of my salary I can use to pay off my mortgage, all the other expenses, go on holiday, etc. But the first thing I do after receiving my salary is investing it in dividend paying stocks by the fixed percentage, which means that if my salary rises over the years, my investment will also rise. For example, I put $400 a month in now, but in like 10 years I might even put in $700 a month because my salary has been growing. By taking a fixed percentage, you are safe because you know that you have money that you can use for other things. And if the market goes bad, that's not essentially a problem because you are doing it with money which you essentially don't need on the short term. If you have money sitting aside and you are doubting what to do with it, I would advise to spread investing the money over a period of time. Why would you want to do this? Well, actually to reduce risk. If you don't live in the US and you want to buy dollar shares, you have currency risk, and you may also have another risk, which is of course how is the market performing. You want to avoid buying at market top. So for example, if you buy 10k in stocks tomorrow and the market goes down next week, well, you actually wasted some of your money. You would be better off if you spread the investment and, for example, split the 10k in a period of 10 months. Well, then if you have decided which stock you want to buy and how many you want to buy, for what amount, you want to set up a limit order. Don't set up a market order, because a market order means that you will buy the stock at the current price. It's better to use a limit order because it is a request to buy or sell a stock at a specific price or better. If you do this, you can prevent paying a price that is higher than you have to. So if you have some patience, it's better to set a limit order. So if Microsoft is trading at $150 a share, which is of course not realistic right now, and I think $155 is a better price, $145 is a better price, my limit order tells my broker that they only want to execute the order when the price drops below that level. And in this way you can prevent overpaying for this stock. There's no guarantee the order will be filled, but if you just stay close to the current price, I guarantee you there's a great chance that the order will be filled. Congratulations, you have taken the steps and you are now officially an investor, because if your limit order is executed, you are actually an investor. These are the steps that I wanted to explain to you. If you have any questions, drop a comment below. Make sure to subscribe, because I will put up more educational material. And thank you for watching.